নমস্কার, আমার নাম শুভেন্দু চন্দ্র। আমি পাস্ট চেয়ারম্যান ইনস্টিটিউট অফ চার্টার্ড অ্যাকাউন্ট্যান্টস অফ ইন্ডিয়া এবং বর্তমান প্রেসিডেন্ট অফ ইসাকা কলকাতা চ্যাপ্টার। আজকে আপনাদেরকে বাজেট সম্বন্ধে কিছু অ্যানালিসিস করব। Budget 2023 has been presented on the 1st of February 2023 এবং এটা নিয়ে অনেক সমালোচনা হয়েছে। বহু সংবাদ মাধ্যমেও আপনারা দেখেছেন এবং বিভিন্ন views have been presented to you. Now, I would like to dwell upon some of the important changes that has happened in the budget 2023. A budget is normally divided into three sections. The first section relates to the macroeconomics. Now, normally, people do not seem to too much analyze the macro part, mainly because these are policy changes, and in order to get the effect of a policy change, it takes several years. Therefore, we concentrate more on the changes to the other two parts. One is the direct tax part, and the other one is the indirect tax part. And by direct tax, I obviously mean income tax. And by indirect tax, nowadays, we mean generally GST, as well as we mean customs duty. Now, let me start with the direct tax portion. Direct tax, there has been several important changes. The first major change is relating to the tax slabs. Now, interesting to note that the government has not proposed any changes to the old tax regime. In the new tax regime, the slab system has been introduced with a gap of 3 lakhs. That is, from 0 to 3 lakhs, the tax rate is nil. From 3 lakh to 6 lakh, the tax rate is 5%. From 6 lakh to 9 lakhs, the tax rate is 10%. From 9 lakhs to 12 lakhs, the rate is 15%. From 12 lakhs to 15 lakhs, the tax rate is 20%. And above 15 lakhs, the tax rate is 30%. Now, apart from this tax slab changes, the surcharge, which was at the highest level, 37%, has been brought down to 25% as per the proviso of Section 2, subsection 8A4 for incomes which are above 5 crores. Now, just to understand that what is the implication of these changes in the slabs, you would appreciate that in many of the assessees, old regime is more beneficial so far as tax liability is concerned. Therefore, they were more interested in the old regime. The government is wanting people to more and more adopt to the new regime. Now, what could be the possible reason for this? Probably, the thought process of the government is that for the old regime, there are various exemptions which are available. You get the exemptions or deductions in respect of your investments in life insurance policies, in your investments in NSC certificates, your Mediclaim policy, you get deductions. The interest income from bank, you get deductions. There are various types of deductions which are available in the old regime. Now, probably the government finds it difficult to cross-match these kind of deductions which the assessee is claiming. Therefore, probably they are going in for a lower rate in the new regime, but without allowing so many deductions. But effectively, you are having to, for most of the assessees, find out whether actually they benefit from the new regime or the old regime. And in most cases, the answer is old regime, because of the benefits of various deductions which they have claimed and for which they have made a lot of savings. Now, coming to savings, I would like to mention probably the government's thought could be that more money be in circulation, less of savings, more of transactions, probably could boost up the economy, and that could be another reason why the new regime is being so much being incentivized, you can say. Now, another very important fact which one must remember is that for those people who are having business profession income, for them, they can, once they adopt to the new regime, they can come back to the old regime only once in their lifetime. Therefore, you have to be very careful of switching over from the old regime to the new regime, because if you go to the new regime, you cannot come back. That is another very important aspect which one must be very careful of. The third important aspect in this particular new regime, old regime, and the slab systems that have been introduced is that the government has announced that this will be taken as the default. What does this mean? That in order to go to the old regime, you are required mandatorily to file your return of income within the due date specified under section 139(1). That is, in case of individuals, if it is 31st July, you have to file your returns within 31st July if you want to continue to be in old regime. Otherwise, by default, you will be considered that you are in the new regime and you cannot take the benefits of the old regime. There are certain other changes to the tax liability. One is the increase in the limits under the rebate allowed under section 87A, which has been increased from 5 lakhs to 7 lakhs. So people having income up to 7 lakhs, they can get the benefits of the rebate under section 87A, and the rebate amount has also been increased from 12,500 to 25,000, which they can claim as a deduction from their tax liability. Now, there are a few other small changes into the new regime. One is that earlier, only individuals and Hindu undivided families were coming under the ambits of the new regime, new taxation regime. Now, artificial, or rather AOP, BOI, and artificial judicial persons all are coming within the ambit of this new regime, which is provided in the section 115 BAC of the Income Tax Act. Few small changes are that the standard deductions have been allowed 50,000 from salaries, and 15,000 for family pension fund has also been allowed in the new regime. It is already there in the old regime, but in the new regime, there was no deductions which were available from salary income of the standard deduction of 50,000. But this year, they have pronounced that 50,000 will be allowed for salary income people in the new regime also. Effectively then, the rates of taxation of partnership firms, cooperative societies, local authorities, and domestic companies remains the same like it is as was before. Now, there were certain other important direct tax changes which I would like to discuss. One is that there are certain incentives which have been given, or lower tax rates, tax concessions, you can say, which have been given for cooperatives who are coming under the manufacturing activities. Now, there are certain conditions which have been laid, like the cooperative has to be formed after 1st of April 2023, and it must start operations prior to 1/4/2024. Then they will enjoy a tax rate of 15%, and a surcharge of 10%. Now, there are two more presumptive taxation sections which have been affected this year. One is 44 AD, which talks about the presumptive taxation in case of business which have a threshold limit of 2 crores, but this threshold limit has this year been increased to 3 crores, but only for eligible business. And there is a condition which has been laid down, that is the cash receipt cannot exceed 5% of the gross receipts. So if your receipts, cash receipts is less than 5%, then you can go in for this presumptive rate of taxation under Section 44 AD of the Income Tax Act, which is for eligible businesses only. And in case of 44 ADA, which talks about professionals, professionals can also go in for presumptive taxation. And in these presumptive taxations, the mandate for maintaining books of accounts details are not there. So professionals who have their income, which was earlier up to 15 lakhs, this year it has been increased to 75 lakhs. So up to 75 lakhs, a professional can go with the presumptive rate of taxation as specified under Section 44 ADA. But here also, the mandate is that the cash receipt portion of the total receipts cannot exceed 5%. So this 5% has already been taken as the norm, without which this section will not be able to give the benefit to the assessee. So now let us move on to the other important changes. Now, another very important change that has been pronounced is relating to life insurance policy and ULIP policies, that is unit linked insurance plans. Now here what they have announced is that subsequent to 1/4/2023, if you are paying insurance premium exceeding 5 lakhs of rupees, then at the time of maturity of such insurance policies, you will be getting the amount, but it will become taxable. So it will no longer enjoy the exemptions that is granted under Section 1010D of the Income Tax Act. Now, exception being that if it is a death claim, then the provisions of this law will not be applicable. That is, other than death cases, if you have or if you have taken a policy where the premium amount exceeds 5 lakh, then you will have to pay tax on that. And not only that, if you have taken or if you have enjoyed the benefits of Section 80C, that is in the old regime, if you have insurance policy, then up to 1,50,000 you used to get deductions. So if you have enjoyed the benefits under Section 80C, then the amount of premium that you have paid will also not be allowed as a deduction from the amount that you received at the end of the policy term on the maturity of the policy. So that is a section, that is a change which is really going to have an effect on the savings of the assessee. But only grace is that up to for 31st March 23, you can continue to have such policies, or you can continue to invest in such policies without having to bother about the maturity amount. But just after 1/4/23, if you invest in any such policies, then your maturity amount will become taxable. Then there are two other important changes which have been pronounced. That is in relation to Section 54 and Section 54F relating to capital gains. Now, in capital gains, earlier there was no cap. That is, if you have sold a residential house property, or if you have sold any capital assets, long-term capital assets, you could have got the benefit by purchasing residential house property 1 year before or prior to the transfer, or 2 years after the transfer in case of an existing house property, and in case of a new or newly constructed house property 3 years from the date of such transfer. And by doing this investment, you could have got the deductions from your capital gain resulting from either the sale of a residential house property, as in case of section 54, or 54F, which is relating to capital, other capital assets. If you have sold, then there was no limit for this deduction. But now they have capped it to 10 crores, meaning that if your property that you have purchased or newly constructed exceeds the amount of 10 crores, then the maximum amount allowable as deduction from your capital gain is only up to 10 crores. And even 54F and 54 taken together, if any assessee is claiming both under both sections, then also the total amount will be limited to 10 crores. So this is another provision, and particularly this will affect people who are having or who are thinking of acquiring property in major areas, major costly areas. Then for them this will really affect, because even say in a place like Bombay, where a flat would be very expensive, a small flat can also exceed 10 crores. So for them it will become a very big challenge, this particular change in the Income Tax Act. There has been another change in section 80 IAC. Now 80 IAC relates to deductions or tax concessions given to certain business houses who are mainly into research and development, and who are falling under certain specified businesses, and they are also approved such companies. Then they were earlier getting a tax concession period which was up to the 31st of March 2023. This has been increased by one more year, that is first up to 31st March 24. But here again, this particular deduction, if you have to claim, then you have to comply with all the provisions of that particular section, and you have to get the approval of the department before that, and for 3 years you can take your profit to be zero. That is the provision. In a 10-year period bracket, 3 years you can take as exempted, as is provided in this section 80 IAC. There has been another change in section 28(4), which talks about perquisites, and there has been a lot of dispute which has arisen, where it has been it has gone up to the Supreme Court, and the decision taken was that here the government did not mean to tax the perquisites in cash. It was only perquisites in kind which were supposed to be taxed, and this particular controversy was ultimately settled in the Supreme Court by stating that it is only in kind that was being talked about. But now the government has gone on to clarify this by making the changes in the law itself, stating that even cash equivalent will be applicable for the perquisites, and it will be taxable. And correspondingly, this change has come into the TDS section under 194R, where 10% TDS is deductible also on the cash or cash equivalent, which will be treated as part of the perquisite. So this is again a change which is going to be a little taxing to the people, to the assessee. Coming back to another interesting change that has happened here is the payment to MSME sector. Now, you know, most of the companies, they are having to pay to the MSMEs. Now, MSME the law has changed. Now, in order to claim the expenses as deductible expenses in your business income, you have to actually make the payment and then claim the deduction. That is, they are saying that within a period of 45 days, if there is an agreement, if there is a PO raised by the company to the vendor, and the vendor happens to be an MSME vendor, then and the agreement says that payment will be made within 45 days, then if you have made the payment within 45 days, then only you can claim the expenses as a deduction from your income, business profession income. But if you have not paid within that 45 days, you will not be allowed to claim the expenses as deductible from your business profession income. And suppose if you do not have an agreement with your vendor, there is no agreement, no PO, you are just making the payment to an MSME vendor, then this payment has to be made within 15 days of the goods or services provided. So that means that for those companies who are making payments to MSME vendors, they have to be very, very careful. They have to have a list of all MSME vendors, and payments have to be processed very, very fast. If you have a PO, 45 days. If you don't have a PO, 15 days. That has to be kept in mind. Otherwise, the expenditure on payment to the MSME vendor will be disallowed by law. So this is again a very important change which has come up in this budget, which one should be very, very careful about. Then a change has been brought about so far as the interest payment in house property is concerned. Now, the deductions claimed under Section 24B, that if you have paid interest against loan taken for house property, that you get a deduction or under Section 24B in the old regime. Now, this will not be added to the cost at the time of claiming deduction for capital gains. This is a change that has come in the law. Then a new section has been inserted, Section 194BA, which is relating to the TDS on online games. And online games is now will be taxed, or rather TDS has to be deducted for such winnings from online games, and the TDS rate is quite high, 30% will be deducted at source. Conversion from gold to gold bond, electronic gold bond, will not be considered as a transfer. Therefore, if you convert your gold into electronic gold receipts, then that you will not be required to pay capital gains on such transfers. So that is a welcome change. Probably that will put more money into circulation in the economy. Two other welcome changes. One is the senior citizens savings scheme, where the earlier limit was 15 lakhs. This limit has been increased to 30 lakhs. And also for the post office monthly income scheme, that has been raised from 4.5 lakhs to 9 lakhs in case of single accounts, and from 9 lakhs to 18 lakhs in case of joint account. Now, all these schemes gives a rate of interest which is slightly higher. So this is a welcome change, because this is going to benefit the senior people and the retired people. So these are mostly, I think I have covered more or less the important changes in the direct taxes. There are numerous other small changes which have happened, which are more relating to technical corrections, small changes which are there, which does not require too much of deliberation. So I have covered the important ones. Now I move on to the next part, which is the indirect taxation. And indirect taxation, I would like to start with GST. Now, GST, as you know, GST law gets changed on a continuous basis through the GST Council. So as most of the matters are taken care of through the notifications and circulars that are issued by the GST Council, so a number of changes in the budget is comparatively less, but there are a few very significant changes in the GST also. So let me talk about one change that is relating to e-commerce. Now, composition scheme has been extended to e-commerce services. Now, as you are aware, composition schemes are applicable for small businesses having a turnover of up to 1.5 crores. Now, to extend composition scheme to e-commerce business would mean that the e-commerce business who are coming under this composition scheme will be mainly small businesses. That is one. Number two is that for composition scheme, the restriction is that it has to be intrastate and not interstate. So if it is intrastate, then the e-commerce services will have to be catering to that state only. So it is presumed that the government thought process is that this composition scheme will be applicable to small e-commerce businesses, and it will be localized. It will be for local services provided in a closed geographical area. So that is one change that has come in. The second change is relating to the reversal of ITC. If the supplier is not paid within 180 days, then earlier law was that you have to add this amount to your GST liability and pay this amount along with interest. Now there has been some small change, that is the ITC, the input tax credit, has to be reversed along with the interest. The interest calculation in respect of the reversal of ITC in cases where the supplier has not paid within 180 days has been provided under section 50, subsection 1 and subsection 3, and it will be at 18%, and maximum it can go up to 24%. Now, there is another change which has happened, which has been pronounced, is the ITC. It cannot be claimed when the expenditure relates to CSR activities. So if you are doing some charitable activities as per the CSR, you cannot enjoy the benefit of ITC. Probably that is the thought process of the government in pronouncing this change. Another change that has been proposed here is that the maximum time limit for filing of GSTR 1, 3, 8 and 9 has been increased to 3 years. Now, a lot of debate has ensued from that, because presently, if you do not file any of these returns within 2 months, then your registration gets cancelled and you have to apply for re-registration, and that too you will be given re-registration up to a period of 7 months. So all these provisions are already there. Now, what is the intention for keeping the maximum limit to 3 years is something which needs to be clarified. Presumably, it is for cases where the officer asks the SSC to file the GSTRs once again. Probably that could be the reason why this particular provision has come in. Another change that has come in, section 132, which states that depending upon the offense in the amount, there is provisions of imprisonment, that is prosecution. Now, as per the law, changed as of now or proposed to be changed, the offense up to 2 crores, and if it is a first offense, there will be no prosecution. That is, anybody who is issuing false invoices or doing such acts which are fraudulent in nature, till 2 crores, they will not be imprisoned. So these are the major changes that have taken place in GST. As I told that since GST Council looks at most of the notifications and circulars they issue, and they make corrections to the law from time to time. Therefore, I believe the changes pronounced in the budget on GST has not been so many. As far as the customs rates are concerned, there has been certain changes in the customs rate. Some of the ingredients have the prices have gone up. Some prices have come down. Like for chemical and petrochemical industry, the basic customs duty on styrene and vinyl chloride monomer has got increased from 2 to 2.5%, and from naphtha from 1% to 2.5%. So this may increase the material cost of some of the chemical industry or the petrochemical industry. Then there has been a decrease in the basic customs duty for denatured ethyl alcohol and crude glycerin, which is used in the manufacture of industrial chemical. Uh, this has gone down from 5% to 0%, which means that this could, for those chemical industry and petrochemical industry, may be benefited, those who are using this as a raw material. Increase in basic customs duty on compound rubber from 10% to 25%, or H30 per kg, whichever is higher. This again could hit the industry which is using rubber. The cost may go up. Now, for minerals, those who are dealing with minerals, there is a reduction in basic customs duty from 5% to 2.5% on acid grade fluorspar. So this could be to the advantage of such industry. Gems and jewelry, reduction in basic customs duty on seeds and used for manufacturing of rough lab grown diamonds have been reduced from 5% to nil, which is going to help the gems and jewelry industry. There has been an increase in basic customs duty on silver, including plated silver, unwrought or in semi-manufactured form, or in powder form from 7.5% to 10%, and silver door from 6.1% to 10%. So silver will become more costly. Increase in basic customs duty on articles of precious metals from 20% to 25%. Changes in basic customs duty on imitation jewelry from existing 20% to H 400 per kg, whichever is higher, to 25%, or H 600 per kg, whichever is higher. So these are the changes which are affecting the jewelry industry. Then for electronics goods, reduction in basic customs duty from 2.5% oblique 7.5% to nil in case of camera lenses and its parts. So cameras will become cheaper. Basic custom duty on parts for manufacture of open cells of TV panels is being reduced from 5% to 2.5%. That means TVs, television sets will be cheaper. Increase in basic custom duty on electric kitchen chimneys from 7.5% to 15%, and basic custom duty on heat coil used in the electric kitchen chimney reduced to 15% from 20%, to rationalize on inverse duty. So this again will be affecting electrical kitchen chimneys and heating coils. Coming to the automobile industry, the basic customs duty on vehicles in a completely built unit form is being increased from 60% to 70%. Basic custom duty on vehicles, including electric vehicles in semi-knockdown form, is being increased from 30% to 35%. So automobiles cost will go up. Capital goods, basics custom duty reduced to nil on specific capital goods machinery for manufacture of lithium-ion cells for use in battery of electrically operated vehicles. Now, in capital goods, duty has been reduced. So some of the machines will be available cheaper to the to the clients, to the manufacturers. Changes in social welfare charges. Social welfare charges exemption on imports of silver, gold, imitation jewelry, platinum other than rhodium, articles of precious metals, bicycles, motor vehicles, including electrically operated vehicles. Uh, so SWS has been exempted for such imports. Changes in agricultural infrastructure and development cess. AIDC is increased on certain specified goods like silver bar, door, gold bar, door, platinum, aeroplanes, and other aircrafts. So there is an increase in these costs. To conclude, probably if we try to match the pronouncements on the basic customs duty going up or down, conclusion may be that the items which will become cheaper or expected to become cheaper are the mobile phones, the cameras, the televisions, and the electric chimneys. What is supposed to get costlier is gold, silver, diamond, clothes, cigarettes, heating coils. So I think that I have discussed most of the major changes in the both the direct taxation as well as indirect taxation. If you have queries, you can mail me. My mail ID is ca.chuvendu@ckaca.net. Your questions, your queries are welcome. Thank you so much.